Hey guys, welcome back to another video. Today I want to talk about the Fed rate hike um, and how it's going to really affect the social welfare programs that we have here in the United States. So the Fed wants to trigger a recession, right? And at this point, it's not to curb price inflation because they're not looking to degrade prices down to normal levels. They want to decrease the demand for products. Did I say that right? I meant to say they don't want to decrease prices. They just want to decrease the demand on those products. Um, and so they say that the job market is too hot, that people say that the economy is overheating. What they're saying is people are making too much money. No one likes it apparently when consumers or workers have the power, have the say in their employment. And so because of the great whatever you want to call it, everyone finding their new jobs, everyone finding opportunities to make more money, that's not acceptable apparently. Because of, our supply issue. Basically, Americans are prospering more than they've ever had in the history. And it's causing this runaway inflation. And so today the Fed just raised rates by 0.75%, 75 basis points, which was kind of expected by the market. Everyone was talking about 0.5% isn't enough. Some were even saying that 1% would be helpful. People want the Fed to take action. Of course, these are all market makers and these are all, rich people and people in the media saying all this crap. Because honestly, what individual wants money to cost more? What individual wants an auto loan to go up by 3%? No one. So the Fed funds rate is about at 1.5%. And, if the Fed is triggering a recession, how far will they let everything go, I think is the main point. And, they're so far from the real inflation rate. If you take, not real inflation rate, the real interest rate, because how you get the real interest rate of the economy is you take whatever the Fed funds rate is, generally speaking, and then you subtract that from inflation. I should be flipping my hands because I think this is the Fed funds. This is inflation rate. And if you subtract that, then you get the real interest rate, which is currently negative, which is not good. In an economy, you should not have real negative rates for that long, for as long as we've had. We've had them for a very long time. So what do? Well, you have to raise interest rates. Well, if you raise interest rates and you say that, if you say that, inflation is around 8%, 7%, you're going to have to raise rates above that or at that level. And so we're so far from that. And the Fed can only raise rates so much, so high per year. So back to when I say how far will they let everything go, and this was made by a good point by an uneducated economist, which his recent video, motivated me to make this video. If you have a recession and it turns into something way more than a recession, I won't say depression, but what if it gets really bad and you don't have room enough to go from quantitative tightening to quantitative easing? You're screwed because you don't have enough room to decrease interest rates. And no one wants negative interest rates. So if the recession's as bad as I think it is, people lose their jobs. And I thought it was really interesting. I'm going to pull it up right now. I found this online. The current United States revenue, I never really looked into it too much. But individual income taxes and payroll taxes make up 76 something percent of all income. And so corporate income, I think, was estimated to be $284 billion dollars in 2021. I couldn't get the actuals. I just got the estimates. But I'm looking at it right now, and it's like about $3.2 trillion comes from both individual income taxes and payroll taxes. I'll leave a link down below. It's from thebalance.com. But I do know that the actual revenue from the U.S. government was like 4.05 or 4.02 trillion dollars. And we spent, there's another article that said we spent about $6.82 trillion dollars in 2021. So that was a deficit of almost $3 trillion dollars. And so what's going to happen when the cost of money increases and the federal government wants to borrow more money from the Federal Reserve to cover for social welfare programs? I mean, this is the one thing that gets cut. I mean, we saw it with the Trump era. They freaking cut school lunches out. And so what's going to happen when people lose their jobs, and we don't know how many jobs need to be lost. We don't know what the unemployment rate needs to be. And the unemployment rate is always higher than whatever the Fed says. The Fed wants to hide that. The federal government wants to hide that information. So, if they say it's 3% right now, it's probably like 5 or 6%. How high does that rate have to be? And we don't know that. It could be 10%, it could be 15%. Is that a normal recession to you? I don't know. Maybe it's just because Americans make so much more money now, even though, real wages have not gone up proportion to inflation. So you are going to see a lot of social welfare programs get cut back. We'll see a switch in politics, probably. I'm going to estimate that the Democrats won't win the next election. I don't think Biden's going to win it because he's not really off to such a great start. He didn't even get his main Build Back Better plan passed because he wouldn't give up on the climate portion of it. I mean, Representative of West Virginia, I forget his name, but that's the reason why he's not helping the Democrats pass the bill. And they don't want to work with a Mitch McConnell, or not Mitch McConnell, excuse me, sorry. The Florida representative, I forget his name. My point is that Biden's not doing well enough. Interest rates and everything's going to rise. Cost of everything's going to rise. Social welfare programs are going to get cut because people are going to switch their political sentiment to the Republican Party. And so 2024, 2025, we're going to see a real change from what we're seeing now. And I mean, that depends on the Fed, what they're going to do. If they're just going to switch back to quantitative easing, then we're screwed. Prices are just going to go through the roof. And it doesn't matter what kind of policy we enact after that. That's hyperinflation. So I guess that's just my 2 cents on, thinking a little bit deeper on, how it's going to impact government spending and how it's going to impact, the lower class. They're going to lose their jobs, and then they're going to lose their social welfare programs. It sounds like the Federal Reserve is going to send people into a real shit show. So thanks again for watching.